part of the title says, is Lyft going to be going bankrupt soon? Well, are they on their last breath before? There was an article that recently just came out, and this is an interesting read, and
Yeah,
this
this
is
is kind of
definitely
weak.
something that we want to keep our eyes on.
Yeah.
So Sergio, take it away.
Okay, this guy's a good analyst, right? I follow Seeking Alpha. They're a good outfit. They don't put out bullshit. It's not hype. In fact, you got to be a member to get these reports. That's not the point, though. The point is, this guy gave a wonderful summary, really. And look, I'm not an analyst. I'm not giving stock advice. I'm not giving financial advice. So with that caveat, let me put my 2 cents in. There is nothing here he said that I disagree with. How about that? Does that sum it up pretty much? Okay. So the reason he's talking about this is because he's looking at the basic mess, simple liquidity position, and they're burning cash. After 10 years, Lyft is still burning cash, month after quarter after quarter. Okay. Stocks value as a company, as we call it, market capitalization, right now is right about at $10 a share. It's about $3.3 billion. Granted, they have some cash and they have some credit lines that they haven't tapped in yet, but they also have long-term debt. They have liabilities as well. So if you take all of that out, the enterprise value of the company is like much less than $10 a share, right? And without going into really too many details, because I don't know how many people are financially savvy or not, but again, this is not advice. So, he's looking into literally just the cash position, the sales that they're generating. And the most importantly, I want you guys to shift your eyes to the right side, because pictures tell a million words or 1,000 words. Pictures are worth a million, thousand, billion words. And it's a pretty simple graph, and it's in 4 different colors, right? The purple color it's pretty pronounced is the share price, which is, as of the writing of this, it was 11, now it's at 10, 10% lower. Then the other thing that I want you guys focus on is the earnings of the company. So that's the orange line, okay, which is trending lower. Now, there is one line that's very pronounced. You guys see that green line, how it's on a 45-degree angle? That's what it should be if it was a stock that's making money. Like in good times, Apple stock would be like that. Would be like 45-degree from lower left to the upper right, okay? Guess what that is, people? That's the share count. So what's happening with Lyft, they're cannibalizing their own earnings. Even if they earn money, they have to earn 50% more now just to be breaking even. The reason for that is, when the purple, do you guys also see that the purple line and the green line are diametrically opposed to each other? Like one is going up and one is going down. The reason for that is, the reason for all their losses, and same in Uber's case, by the way, this is not just a Lyft situation. They have to issue shares of the company for their stock options. And the lower the stock goes, the more shares they have to offer. That's why that green line keeps going higher and higher and higher. And there is a thing called reset when the executive stock options or employee stock options are out of the money, as we call it. They have to issue more shares to make up for the difference. So the more shares they're offering, the more dilution is happening with their earnings. So even if they make money, they have 50% more shares outstanding than the first day they came public. Now that green line is going to keep going higher. The purple line is going to keep going lower. And at some point, all the shell game that they're playing is going to catch up to them, and they're going to run out of cash because they're eating their cash resources. They're basically eating their own flesh at this time. And this guy's analysis is pretty correct. And he says through 2024, he doesn't see them existing through 2024. So that's his opinion.
I like the summary points there, because he says the first one, ride-sharing firms, basically Uber and Lyft, struggled to prove their business model. Both Uber and Lyft are suffering from chronic negative operating margins and cash flow losses. But then he goes on saying Lyft's financial position is far worse than Uber's for several reasons. But as its working capital level falls into deeply negative territory and its equity dilution rate grows, which that's what you hinted with the chart graph there, how they're diametrically opposed.
Yep.
And then they have comparable gross margins, but operating cost of sales are far higher for Lyft due to immense stock-based compensation.
Yeah,
And
that's what it
then
is.
they also, the other thing besides that is how they may find an activist or strategic buyer, but it may lack sufficient strategy or strategic value in today's economy, which, you know, that was the thing. Like, who thought, somebody might come in and buy them up? But now it's like, would you?
Yeah, I know. It's not
Yeah,
a good business to be in. Honestly, rideshare only is not a good business to be in. And I think the only value I see in Lyft, as a technology company, they call themselves, is in the data that they have collected the last decade.
mhm,
And somebody is going to grab that data. Who that is? Could it be an autonomous vehicle company? Could it be another company? Look, Waymo doesn't need them. They have more miles autonomously than anybody else, pretty much. Tesla definitely doesn't need them. DoorDash doesn't have the money to buy them. Uber, they're not going to let Uber buy them. I mean, why would you want to buy this company that's bleeding cash for 10 years, right? I mean, you're in the
yeah,
business, not any business, to make money. Even if you have a lemonade stand, you want to make money. I mean, you don't want to just lose money. The fact that, though, that stock-based compensation numbers, the green line and the purple line, is going diametrically opposed to each other is not good. In healthy companies, both would be going in the same level of a 45-degree angle from the lower right to the upper, lower left to the upper right. So
mhm.
I think this guy may be right. And they're going to run out of cash. He goes, and what's going to happen, Chris, when they run out of cash is they have to offer more equity. They have to raise funds.
Yep.
And
Or they go bye bye.
when they offer more shares, they're going to dilute themselves more. So if you're a Lyft lover, sorry, but writing's on the wall,
So
kind of, to me.
my question is, besides you saying that you agree with this person's assessment on this breakdown, um, one, where do you, how much longer do you see Lyft until something happens, whether that's a buyer comes in, a partnership, um, or they have to close doors? And then
I,
what do you see out of those three options happening?
I think I I don't think a buyer imminently is going to come, but I think if a buyer is going to come, they're going to come sweep this company for nothing but. They may sweep him out of bankruptcy court. To be honest with you, that'll be the cheapest way to do it because you still get all the data. I think the most important thing to me is the business model. The business model is proven not to be healthy for the last decade. I mean, rideshare is a very difficult business to be in. It's proven that
Mhm.
none of these companies can make money. Look, we have a lot of drivers that go, oh, those screenshots they look at, they charge 260 but pay the driver 50. Where is all this money going, right? All this stuff that they talk about. People, they laid people off. They laid 7% of the workforce off, 1,300 people. And and they did the right thing because they know what's happening. I mean, internally, obviously. My conclusion is somebody will come and buy them for a song and a dance at some point, not imminently, because they're going to let the cash bleed out and then offer more shares and then dilute more. But the important thing is, a lot of people have this perception that Lyft is swimming in cash. They are not. If they were making truly that kind of margins on every trip, because we hear this from drivers all the time. Oh, Lyft is holding 50%. Lyft is taking 60%. That's on that one single trip. If you look at overall, even with the layoffs, Chris, they still have 4,300 employees. Okay.
Yeah,
Now, if you
and
look at
that's great.
4,300 employees, do you think anybody is working there less than a couple hundred K a year? That's $800 million a year expenses, and that's without any other expenses, taxes, employment taxes, unemployment insurance,
Mhm.
all that stuff. So this company is burning cash because they're running a business, and the business margins are not there. And rideshare is historically a shit business to be in anyway.
Well, I
So
think
we'll
that's why
find
I
out.
think that's why Uber had branched out into multiple sectors like food delivery and
Yeah,
these different areas, because they saw that rideshare is not as profitable as it probably could have been. You can be a disruptor and completely change the model of something, but if you don't realize that there's not a lot of margin to begin with, you're not going to be able to compensate for that in the
yeah.
long term.
You can disrupt the
So
business. That's you can
for me
disrupt the
personally,
yeah.
I think they're gonna have to partner with somebody. I think somebody's gonna
Probably,
have to come in and partner with them, whether
probably.
that's, something like DoorDash coming in, whether and then expanding that, or, something like, um, I don't know, Elon likes taking on weird things, so I
Elon
don't
is
know,
in
maybe
big trouble, bro.
next
Elon is in
CEO.
big trouble. Elon is in
So
big trouble.
All right, thanks for watching. That short little clip was from our live stream, Show Me the Money Club with Sergio and myself, Tuesdays, 6 p.m. Eastern, 3 p.m. Pacific. Make sure you subscribe, turn on all notifications so you'll be notified when we go live, as well as all of our awesome content. Make sure to check out this video right here, which will take you to the entire live stream, or check out this video right there. All right, drive smart, everyone.